Okay, so in the last class, what we did was we actually did the past examination question of March, June 2025. So what did we do? We do March, June 2025. Today, I'm going to start off with September, December 2024. So September, December 2024 is the examination that I'm going to go through. Again, I am going to be using a spreadsheet. Okay, so AFM September, December 2024. Let's talk about this examination paper and let's just see that what exactly is being tested in this specific question. So the question, it says the following exhibits available on the left hand side of the screen provide information relevant to the question. Organization information, consultants BSc, value for money, new information, etc. etc. Now, what's the requirement of the question? So there are multiple requirements to this question, and those multiple requirements to this question actually include: it is now 1st September 2005. Write a report to the board of JMR to respond to its instruction for work on the following areas: consultants BSc, value for money, and the new information system. So basically, it is now 1st of September X5, and you got to report on this specific thing. Okay, so let's just begin. Again, it's basically September, December 2024. AFM, September, December 2024. Let's just talk. So basically, first of all, let's just read through the organization's information. Yeah, can you just go through this organization's information, please? Okay, the J-Land Medicines Regulator oversees the testing process for medicines in J-Land. On behalf of the government and the people of J-Land, it ensures that all the necessary tests by pharmaceutical companies are carried out to acceptable standards. So JMR is actually a regulatory authority. I bet JMR is actually a regulatory authority. Now what next is there? Then it makes the final judgment about whether a medical product can be sold in the country or not. A new government in J-Land has produced new objectives for JMR, which are to protect and improve public health by ensuring that medicines have an acceptable quality. Number two, the users of these medicine understand the risk benefit profile in taking any authorized medicine, and the new medicine development is encouraged. Also, as the government is concerned to manage public funds properly, JMR must deliver value for money in carrying out these objectives. JMR is governed by a board of trustees appointed by the government. It is funded directly by the government and also through fees charged to pharmaceutical companies when they apply for licenses for approval. To sell their products in J-Land, the government is currently under pressure to reduce its costs and so wants JMR to be financially independent. Along with new objectives at JMR, the government has appointed a new chief executive officer, CEO. The CEO brought in consultant who has analyzed the balance scorecard perspectives and prepared a set of KPIs to use as a scorecard for appendix number 1. Now, requirement of the question is write a report to the board to respond to the following area: consultant's balance scorecard. This is the consultant's balance scorecard thing. Then there is this appendix number 1. This is appendix number 1. The appendix number 1 has got relevant KPIs, etc. Now, let's just see. So can you just look into it? Yeah, can you just look into it? Okay, let's see. The board of trustees reviews. Now see, I told you people that the examiner gives the questions requirement in the question itself. So you got to see that what is the requirement of the question. The board of trustees requires a review of the work done by the consultant, appendix number 1. So what do they want? They want a review of the work. But you have been advised to ignore the financial perspective at this stage, and this will come under the heading of value for money. So ignore the financial perspective. And then he says the board believes you should begin with an assessment of whether the consultant has correctly described the other 3 perspectives for the use of balance scorecard at JMR. Then the board wants an evaluation of each of the specific suggested KPI under each of these 3 perspectives. Then the board wants an evaluation, wants an evaluation, of each of the specific suggested KPIs under each of these 3 perspectives. At this stage, the board does not want you to reperform the KPI exercise. So it has advised you to focus on the suggested KPIs and note if there are limitations of their coverage. So first of all, I'll just write down what is the question's requirement here. So if I talk about consultant's balance scorecard, right? So what does he want us to do? He wants us to do this thing, which is basically he wants us, the board wants an evaluation whether the consultant has described the, okay, evaluate if the consultant has described, the 3 perspectives correctly or not. Then he says that then the board wants an evaluation of each of the specific suggested KPIs under each of these 3 perspectives. Evaluate suggested KPIs under each of the perspectives. Then what else is there? So then the board wants an evaluation of each of the specific suggested KPI under each of these 3 perspectives. The board does not want you to reperform the KPI exercise. So it has advised you to focus on suggested KPIs and note if there are, okay. Note if there are limitations in the coverage of the KPIs. Now, so you got to read through it, ignore the financial perspective, focus on the rest three of them: customer, internal business, and innovation and learning. Yeah, just go through it and let me know what do you think about it. Okay, so Antonio has an answer. Okay, Antonio has an answer. How about others, please? I will start discussing. Okay, so I've got Mahinga Mahutu also as an answer. Okay. How about others, please? It's not just the customer perspective. How about the others? Okay, let's see. So Mike, Antonio has an answer, plus at the same time Mahinga has an answer. But now let's just see. Um, I'll just go back to this company. It says the new government and JLand has produced new objectives for JMR, which are to protect and improve public health by ensuring that. So what do we need to ensure that the medicines have an acceptable quality, the users of medicine understand the risk benefit profile in taking any authorized medicine, and the new medicine development is encouraged. Must deliver value for money. So we're not going to talk about the value for money right now, because we are being told that the value for money is going to be something that you'll have to cover up a bit later. Now, next situation is JMR is governed by board of trustees. It is funded directly. Has appointed when they apply licenses to sell their products in Zealand. The government is currently under pressure to reduce its cost. Now, see, the perspective identifies what matters to our customers, who at JMR is the government. Its objectives are covered by value for money concerns within the financial perspective, and also to protect the public health. Also to protect the public health. Now, average life expectancy in Zealand in 2005, this was 75.2 years. 2004 was 75.1 years. The number of deaths due to incorrectly authorized medicines in 2005, this was 25. Now, JMR, we are actually trying to do it for JMR. What's its objective? The objective is to oversee the testing process for medicines in Zealand on behalf of the government and the people of Zealand. So the customer is okay. It ensures necessary tests by pharma companies are carried out by an acceptable standards. It makes the final judgment about whether a medical product can be sold in the country or not. So the whole business is based upon allowing whether a medicine could be sold in the country or not. So it's actually to ensure that the medicine, whether it could be sold in the country or not. Now, now see, um, what are we gonna do? We're gonna say that okay, the perspective identifies what matters to our customer, who at JMR is the government. Okay. If we talk from the perspective of customer perspective, So the customers are not only the government, but pharmaceutical companies, plus in addition to the pharmaceutical companies, we have what? We have this, in addition to the pharmaceutical companies, there is also the public, that is also one of the relevant people from whom you have to actually look after. So the customer perspective is not just the government, but also the pharmaceutical companies also. Now with respect to KPI, so what do we have to do? We have to say evaluate if consultant has described the perspective correctly or not. Evaluate the suggested KPIs under each of the perspective. Note that there are limitations in the coverage of the KPI. Now what next is there? So evaluate suggested KPI under each of the perspectives. So when we are talking about KPI evaluation, so what is actually happening with respect to the KPI evaluation? Let's discuss about it. So from the perspective of KPI, average life expectancy in J-Land in 2005, this was 75.2 years. Number of deaths due to incorrectly authorized medicines, this was 25, 2004, 34, arose through a single bad batch of one medicine. Now see, what happens is, I personally think that the KPI of life expectancy, this is not always, this is not always attributed to. You see, this is not always attributed to. This is not always attributed to the medicines, but many factors actually have an impact on the life expectancy. So if we only consider so if we only consider the life expectancy and attribute this to the performance of JMR, it may not be an appropriate measure. Then additionally, deaths due to incorrectly authorized medicine. This is an appropriate measure as it is directly due to the as this is directly due to the activities of JMR, but as this is directly due to the activities of JMR, but activities of GMR, but not always relevant, as the product may be tested correctly, but when the production of a batch took place, then these substances could be improper, like as it happened in one of the cases. So overall, the KPIs suggested are not exactly measuring the performance of JMR, although this is the concern of government, which is one of the major customers, but not completely under JMR's control. You get this point? This is not completely under JMR's control. Now, it's okay. We have considered these KPIs, but this is not exactly under the JMR's control. Right? What next is there? Next is basically about the internal business perspective. Next is basically about the internal business perspective. So when I talk about internal business perspective, it says the perspective considers the processes which we must accelerate in order to achieve our financial and customer objective. The KPIs reflect the importance of having qualified staff and their speed in processing applications for approval of new medicines. Average time to authorize an acceptable new medicine. Uh, Number of staff vacancies unfilled for more than 3 months in the year. This was 6 in 2000. This was 6 in 2005, and this was 7 in 2004. So it's like we must accelerate in order to achieve our financial. Having qualified staff and their speed in processing applications. Now see, for the internal business perspective, for the internal business perspective, the perspective is correctly defined, and there could be an addition of correct processing of the applications. The KPIs the KPIs are evaluated as under. So when we evaluate the KPIs, so there is this what number of staff vacancies, average time to authorize an acceptable new medicine. Okay, average time to authorize the new medicine. This is a relevant. This is a relevant KPI in respect of the performance of JMR, but this is not always going to be JMR who would be responsible for ensuring that this is done on a timely basis. The pharmaceutical companies who are getting the approvals are also relevant in ensuring that the application is processed quickly as so is application is processed, the farmer is getting also ensuring the application processed quickly as if the documentation and testing done appropriately, then this would speed up the process, or else the process would slow down, So see, it's not always JMR who's to be responsible. Secondly, number of staff vacancies unfilled for more than 3 months in the year. Staff vacancies unfilled. Their role is to ensure they have qualified, trained, and appropriate staff who could handle this scenario. So the role is to ensure who could handle this scenario. Now, keeping a vacant position would slow down the process, and this is correctly reflected in the KPI. However, it is not always in the control to recruit staff quickly, as at times the staff is not available easily, readily in the market. So what are you going to do? If the staff is not available, what are you going to do then? You cannot control it, right? So it depends upon whether the staff is readily available in the market or not. If the staff is readily available, good enough. If the staff is not readily available, then that's actually a problem which you cannot control. So as a JMR, yes, we are ensuring that we don't have any vacancies. We're ensuring that we have relevant staff available. We're ensuring that we have got complete coverage, but at the same time, there's something that we cannot control. If we can't get the staff from the market, what are we going to do? We cannot handle it. We cannot, we cannot help it, right? Okay. Now what next is there? The next one is innovation and learning. None of you have given any comment on innovation and learning. What do you think should be done for innovation and learning? Yeah, there is internal. Okay, there is no input from you people on the innovation and learning. What about innovation and learning? What about innovation and learning? Yeah, what do you think about innovation and learning? Hello, everybody. Where are the rest? Only two people are active. Okay, now let's see. So Mehinga actually has an answer for this. Now let's see. Innovation. The perspective considers the ability of the organization to maintain its objectives within a changing environment. Okay. Yeah. So how about this? That if we talk about it, that maybe the innovation and learning. So when I talk about innovation and learning as a perspective, so what is actually going to happen is that um, there could be a disk. Okay, the measure is defined appropriately. The measure is defined appropriately. The measure is defined appropriately. However, however, additional definition of this perspective could be that ensuring that new methods of no, there is no criteria. All that you have to do is that you had the questions requirement and you had to actually answer like this. So we actually listed down the questions requirement that evaluative consultant has described the perspective correctly or not. So you have to comment on that. Number two, you have to comment whether the suggested KPIs under each of these perspective are appropriate or not. And the third one of them is basically if there are limitations in the coverage or not. So that's what you have to do, right? That's what you have to do. Yeah, that's okay, Isabel. Sorry about it. Now see, so we actually did decode it from the questions required. Now, when we talk about the KPIs percentage increase in number of new medicine application for authorization in the year compared to running 5-year average. So the percentage increase has nothing to do with your innovation. Number of days of staff training authorized. Okay, the staff training is basically to enhance the skills and that could be covered up in the learning. But what you could do is that uh, no specific description for the learning is provided. Now, when I talk about KPIs, so it says percentage increase in number of new medicine application for authorization in the year compared to running 5-year average. So basically what happens is percentage increase in number of new medicine application. So percentage increase in new application has nothing to do with the innovation and learning at JMR. It is something. Has nothing to do with the innovation and learning. It is something that is what the pharmaceutical companies has to do. The process speeding up and the expedition could be attributed to GMR. Staff training is appropriate measure, but number of training days is too narrow a measure, and a better measure would be and a better measure would be staff training appropriate measure, but a number of training days is too narrow a measure, and the better measure would be a better measure would be the number of additional and new skills acquired. Okay. So number of staff training is appropriate, but number, see what happens is staff training days. What is the staff training days? If your staff is getting trained for 10 days, 20 days, 30 days, that's okay. What does it show? What does it show? It doesn't show anything. It doesn't show anything, right? It doesn't show anything. It doesn't show anything. You understand this? Okay, let's move a bit forward and let's talk a bit further about the second requirement of this question. So when I talk about the second requirement of the question's requirement is about the value for money. And there is this appendix 1, which we have to actually look into. Again, the same appendix. It says the final objective for JMR is to deliver value for money using the 3 E's framework. In achieving this other objective, the board has asked for a more precise explanation of what this means. So what do we have to do? We have to actually, second requirement. What is the examiner asking you? Explain VFM. Explain VFM. Number 2. The final objective for JMR is to deliver value for money using 3 E's framework. In achieving the other objectives, the board has asked for more precise explanation of what this means, and then an evaluation of whether consultants' KPIs under the financial perspective measure this. Okay, the KPIs under the financial perspective measure these or not. Number 3, you have been advised that you can, if needed, suggest improvements to the detailed definition of KPI in order to better focus the measure. Provide or suggest improvements to the detailed definition of the KPIs if needed. Now, yeah, you could just mention that. You could just mention that, Antonio. Now, see, the risk was never mentioned anywhere. Now we have got this financial one. So we have to talk about the financial one. Now, can you just go on to it? The examiner's requirement is explain VFM. KPIs under the financial perspective measure these value for money things or not. And you got to suggest improvement to the detailed definition of KPIs if needed. Now, can you do it, please? Okay, Mehinga has an answer. Okay, let's see. So thank you. You people have done good. Antonio has an answer. Now see, economy, total cost of JMR is good measure. We can consider information. Now see, what do I need to do with respect to this? Mahingo, Richard, everybody has an answer. Very nice. Now see, so when you're gonna answer this question, answering this question, you will first of all apply the value for money stands for the value for money is a method of measuring performance of a not for profit organization. The value for money comprises of three E's of economy, efficiency, and effectiveness. right? So value for money covers three. Is now economy is what you would define, efficiency is what you would define, and the effectiveness is what you would define. The economy is ensuring that the tasks are performed in a cost effective manner. Whereas when it comes to the efficiency, the efficiency is ensuring l- less amount of resources are used for completing the task, whether
Yeah.
that be machine, labor, staff, etc., etc. The objective
Ah, não pingo.
objectives are achieved
Escribir
like the objectives are achieved like ensuring that the objectives are achieved like ensuring that the approvals are 100% correct. Now, when we talk about the questions requirement is number one, you have to now see whether the KPIs are measuring the relevant thing or not. Now let's just see. The total cost of running JMR in 2005, this was 77 million. 2004 is 70 million. Okay. For the economy, the cost of running JMR is a relevant measure, but this measure has several limitations because the cost could increase due to multiple factors, including the increase in the activity and the approvals. So a better measure would be to calculate the cost per approval, as the that is what the purpose of JMR is, to ensure that the approvals are done in as low cost as possible. The total cost could increase if activity increase, but that does not reflect if they operated economically or not. If they operated economically or not. Next is basically, it says efficiency, the total cost of deciding whether a new medicine was accepted for use in J-land in 2005 was 0.75 million, calculated as the total cost of running JMR divided by the number of medicines authorized during the year. So what do you think? Is the efficiency appropriate measure? It's a useful matrix. It's a useful matrix. The efficiency, this is a useful matrix. Another matrix could be another matrix could be to calculate the idle time of the staff. Additionally, time taken to approve additionally the time taken to approve the medicine slash test the medicine. That could also be another thing. Now, effectiveness. Percentage of income derived from external fee as percentage of total income, external fee plus government subsidy. Uh, yes, the financial effectiveness could be measured using this measure. Additionally, the effectiveness could also be evaluated by effectiveness could also be evaluated by could also be evaluated by measuring the percentage of correct approvals, as the ultimate goal is to ensure that the approvals are meeting the standards. So this is something that you have to ensure, right? What is it? This is something that you have to ensure that the approvals are meeting the standards, right? This is something that you have to ensure that the approvals are meeting the standards, and this is what the effectiveness is. So if you have actually laid down the standards and if your approvals are meeting those standards, then good enough. If the approvals are not meeting those standards, then that's our problem. Then that's our problem. Okay, now let's move a bit forward and let's talk about the next requirement of the question. The third requirement of the question was new information system. You got to talk about new information system. Now, can you just go about it? Yeah, can you just go about it, please? Okay, let's see. It says that the consultant has recommended that a new information system be put in place to gather processes and report on the balance scorecard indicators. The system would involve a unified database for all performance reporting across the organization. The board was initially impressed with the idea that this should be a lean system, as this is something which a number of other government bodies have been talking about using lean system, which are going to improve the quality in their operations. However, consultants' explanation that the new information system will help to structurize, systemize, sanitize, and standardize and sustain left the board confused. The board wants you to explain more about this. what the 5S mean in the context of introduction of the new information system and what there may be in implementing these lean principles. So, okay, let's just talk about this 5S model. So they want to know okay, 5S model. So 5S model is basically a structure, systemize, sanitize, or scanning. Number fourth is basically standardize. Number five is basically sustain. So what happens is 5S model, the 5S principles are used as part of lean management. So an information system that is implemented using the 5S principles will be as under. So including the 5S principle would be as under. So now what exactly do you mean by this structure? The structure actually talks about that the new MIS, the management information system, does not include the items or processes that do not add value to the final output. Unnecessary or repeated activities are avoided, and the data which is no longer needed or does not meet the objectives is not reported. So that's one thing. You structure in such a manner that it only has got the relevant stuff, no irrelevant stuff. It only has got the relevant stuff, no irrelevant stuff. That's what it is. Systemize is basically all items needed for work are easily and quickly accessible. Like the system would allow most used files to be easily accessed, plus the information which is frequently needed is available through minimal steps. Is available through a minimal steps. Third is sanitize. Right now, what next? Sanitize. So sanitize or scan is basically it actually means to declutter. For the MIS system, this would mean yeah, Mahinga Mahutu, thank you for your input. For MIS system, this would actually mean that the unnecessary reports and information that is generated is removed from the reports that are generated for the relevant level of management. For the relevant level of management. Then there is this standardized. So ensuring the processes meet certain standards of reporting, like reporting, like automated reporting, example, weekly, monthly, etc., etc. Lastly, sustain, ensuring that the staff and staff is motivated and keeps ensuring that the staff is motivated, ensuring that the system operates in the effective manner. So this is basically to ensure that the staff is motivated. So this is basically involving everyone across the organization to ensure that the system is continually being followed. So if you are to implement this MIS and if you want to follow this specific system, this is something that you have to do. This is something that you have to do. Right? All good? Okay, so we are done with this question. Now let's take a short break of 10 minutes and then we move on to the next two questions. Okay, so welcome back to the session. We're now going to move forward and we're now going to move on to the next question. So what is the next question all about? The next question is basically about the divisionalization and transfer pricing. So repeat, the next question is about the divisionalization and the transfer pricing. Let's talk about this question and let's see how things are. So it says the following exhibit available on the left hand side of the screen provide information relevant to the question, company information, divisional manager bonus, transfer pricing policy, appendix 1. What is the requirement of the question? The requirement of the question is it is now 1st of September X5 respond to the CFO of Lochan's request for work on the following areas, right? Divisional manager's bonus and transfer pricing policy. So that's what you have to talk about. Divisional manager's bonus and the transfer pricing policy. So this is basically question number 2. Now, company information. Let's talk about the company. Can you just quickly go through the company information, please? Yeah, take 3-4 minutes, go through the company information. Okay, now it says Lochan manufactures solar panel systems which are used for generating electricity from sunlight. Lochan has two independent divisions which are profit centers. You know what profit centers are? They're responsible for the sales and the cost. J division operates in J-land and produces solar panels for use in residential homes. T division operates in the neighboring country of T-land and produces similar but much smaller systems for installation in mobile homes and small garden buildings. Each division currently only sells within its own country, and there are currently no transfer of goods or components between the two divisions. So there are currently no transfers of goods or components between the two divisions. Lochan has a head office in T-land, which provides IT, treasury, HR, and other support services. Head office costs are allocated to each division according to divisional turnover. Okay. So allocating the divisional cost on the basis of divisional turnover, head office cost. IT system are basic compared to similar size businesses. So don't have the advanced IT systems. Three main components of all solar panels are the solar panel themselves, an electrical device known as inverter, and a battery bank. J division manufactures all three of these main components for its products. So what does it do? It produces all three of the main components for its products. T division manufactures its own solar panels and battery banks, but purchases inverters from an unconnected third-party supplier in Zealand. Purchases inverters from an unconnected third-party supplier in Zealand. So what does it do? It manufactures own solar panels and battery banks, but purchases inverters. 50% of the direct cost of each solar panel system relates to the cost of the solar panels themselves, and 40% relates to the cost of the batteries. An inverter is an electrical device which connects the solar to the business. Okay. Now, divisional manager bonus. So can you just read through it? Along with it is the appendix number 1. Along with it is appendix 1. Can you just read through this area, please, first? Okay, it says a new chief financial officer joined the Lochan head office team just over a year ago. One of our first tasks was to introduce a bonus scheme for the senior managers in both of the two divisions. Now, each manager was offered a significant bonus in addition to their existing remuneration, according to whether division achieved the budgeted net profit for the year or not. So the divisional managers achieved the profit on the basis if the budgeted net profit for the year was achieved or not. The new CFO introduced the bonus scheme as she thought it was a good way to motivate the managers to improve divisional performance. The CFO said this because the bonus is based on the divisional net profit and this is what the managers are accountable for and it is under their control. The CFO said that most senior finance professional at Lochan, she would make the final decision on whether the managers should receive their bonus in the event of any disputes. Now, divisional manager of T has now complained to the CFO that the bonus scheme is not fair and that he should receive his bonus for the year despite T division not achieving the budgeted divisional net profit. CFO is due to have a meeting with manager of T division to discuss his complaint. The CFO asked your advice as a performance expert in preparation of the meeting. Using information in Appendix 1, the CFO wants you to advise her of the problems with the basis of which the manager's performance is assessed. You should also advise, including relevant calculation, whether a T's manager should receive his bonus for the year or not. So manager is not happy with the divisional bonus. He says that this is not the appropriate method. I want an appropriate method. This is not an appropriate method. That's what the manager said. Now, let's just see. Let's just talk about it. So he has given to us the actual net profit of the T division, the budgeted net profit of the T division, the it says that how much of the head office cost is allocated to the actual net profit and how much is to the budgeted. Then what else is there? Key variances. Gas used in production and heating cost 97 adverse. Cost of sale inverters 200 adverse. Now, gas is purchased on a variable tariff negotiated by the head office. Market price of gas increased significantly, which led to adverse variance of 55. Remaining was due to excessive gas consumption by poorly maintained gas heaters. Cost of sales inverters, a favorable variance of 46,000 is due to exchange rate. Movement between J dollar and T dollar. Exchange rate has been volatile and changed significantly over several years. Then a batch of 5,000 inverters was ordered at a premium equivalent to 10 per unit because not enough were ordered by the production planning department from the usual supplier. This was due to incorrect inventory levels showing in the inventory count. An adverse variance was caused by T division changing to a higher specification of inverter partway through the year. This was required to comply with new environmental regulations, which had been announced on 31st October, but only came into force on 31st October X4. Costs, which were purchased from the usual third-party suppliers, 10% higher than the previous inverters. The division accepted the price increase without attempting to source the new specification inverter from a cheaper suppliers in the market. Now, let's try understanding this. What I would probably try to do is that calculate the revised variances for the so you have to calculate the revised variances for the net profits. So you have to calculate. You have to calculate the adjusted profit. You have to calculate the adjusted profit. So how would you calculate the adjusted profit? That's something that needs to be done. Now see, the actual net profit of T division is 475. Now head office cost allocated is 220. Then what actually happens is that for the gas tariff increase 55. This is outside the control. Then cost of sales, exchange rate movement 46. That's an external factor. Okay. This is their fault. This is okay. This is gonna be adjusted actual profit. This is adjusted actual profit, and you say compared with adjusted budgeted net profit. So adjusted budgeted net profit, what is it gonna be? It's like 500 here and then 190 here. So it's actually gonna be 500 plus 190, 690. So this minus this 14 is the variance, which is a favorable variance. Now, what was the requirement of the question? The requirement of the question was wants you to advise her of the problems with the basis on which the manager's performance is assessed. You should also advise including relevant calculation where manager should receive his bonus for the year. Now, the problems with the performance management is that controllable profit is not used. This means that things outside the control of managers are considered when calculating the actual net profit. There are certain elements that needs to be considered. Allocation of head office costs. These costs are beyond So beyond the control of divisional manager, should not be considered when evaluating the performance of the managers. Gas cost, the increase in the gas tariff by the government is outside the control of the divisional manager. The increase in the gas tariff by the government is outside the control of the divisional manager. So what happens is the increase in the gas tariff by the government is outside the control of divisional manager. And furthermore, the increase consumption of the gas due to lack of maintenance is something that the divisional manager should be held responsible for. Then what happens is the cost of sales. So exchange rate is not something that the divisional manager enacted. It should not be considered. Okay. Now, so exchange rate is not something that the divisional manager enacted. It should not be considered. It should not be considered. So what actually happens is that, however, the ordering due to incorrect inventory levels is not appropriate, plus ordering due to incorrect inventory levels is not appropriate, and the manager should be held responsible for that. Adjusted budgeted profit The budgeted profit should not include the allocation of head office cost. As per the revised working, the manager's efforts led to a favorable variance of $14,000. Favorable variance of $14,000. Of $14,000. Hence, the manager should be paid the bonus. Okay. Now transfer pricing policy. Can you go through this section, please? Can you give it a try? Okay, so let's talk about the transfer pricing policy. Now, as a result of recent and significant increase in the prices of inverters, which T division purchases from the third party supplier, it has been suggested that T division should instead purchase all of its inverters from J division. J division currently has spare production capacity. So J division what has spare production capacity. Now what next is there? A proposal for T division to purchase inverters from J division on a temporary basis was tried several years ago. So proposal for T division to purchase inverters from J division on a temporary basis was tried several years ago. At that time, J division had spare capacity to manufacture inverters suitable for T division, which was experiencing supply problems due to flood at the factory of the third party supplier. However, the managers of the two divisions were unable to agree the amount of the price of inverters to be transferred despite conducting lengthy negotiation. This distracted the manager's attention from day-to-day running of divisions. In the end, head office intervened by instructing the managers to abandon the proposal, as overall it was unclear whether it was in the interest of Luchan as a whole and whether its impact could be reliably measured or administered. The decision by head office was also influenced to a small extent by press story that the competitor was fined by tax authorities in J-Land for setting a transfer price to reduce its profit earned in J-Land, with the tax rate is 25% compared to 20% in T-Land. CFO believes that before making a final decision on the suggestion that the T division should purchase all of its, Lochan should introduce a formal transfer policy. Shazaju advise on criteria for designing this policy. Okay. So what should be the criteria for designing a transfer pricing policy? Criteria for designing a transfer pricing policy. Now, what should be the criteria for designing a transfer pricing policy? Should promote divisional autonomy, facilitates divisional performance measurement, promotes goal congruent behavior, helps reduce taxation impact. Yeah, what else can you think of? Yeah, what else can you think of, please? Yeah, so facilitates, okay, avoids conflicts. So you have to actually write on these bases. You have to write on these bases. Right? Okay, good enough. Now, let's move on to the next question, which is basically the following exhibits available on the left hand side of the screen provide relevant to the question. Requirements is you have to respond to Ghalil's performance director request for the following areas: service business, building block model determinants, building block model standards. Now let's read through the company information first. Okay, so Galil Ferry Company undertakes a range of ferry service in the country of Zealand. Zealand has many islands which are seen as areas of natural beauty and are popular for holidays with Galil's passengers. Now, so what next is there? For the last decade to meet the passenger demand. Galil owns 35 ferries and completes on average 120,000 individual journeys per calendar year. These journeys can range in duration from 25 minutes for the shortest to 8 hours for the longest, including the turnaround time. The ferries operate for 365 days a year and some night journeys are undertaken. The ferries are all of a broadly similar size and are each equipped to transport up to 65 cars and 350 passengers. Gully's objective is to maximize returns for the owners of the business through providing an excellent service for customers, optimizing the use of its assets, and developing a learning culture throughout the company. Okay. Now, next is basically service business. So, what does he want for the service business? Yeah, quickly go through it, please. What does he want for the service business? See what he wants for the service business. Yeah, see what he wants for the service business. Okay, Galil has recently recruited a new performance director whose background was in the pharmaceuticals industry. She is keen to learn about She's keen to learn about this industry, though has been confused by some of the terminology used by staff in Galil. She has hired you, the performance management expert consultant, to develop her knowledge in that area. She has asked you for an explanation of SHIP acronym: simultaneity, heterogeneity, intangibility, and perishability, which is describing the characteristics of the services provided by service business. Question number 3. Now, let's just see. So, simultaneity, heterogeneity, intangibility, perishability. Services are produced and consumed at the same time. Services are produced and consumed at the same time. Just a second, please. Okay, so some services are produced and consumed at the same time. So this would mean that there is no opportunity to rectify the errors caused, as would be the case in the manufacturing situation. This is about simultaneity. What is it? It is about simultaneity. Now, heterogeneity is that the services are usually dependent on the involvement of the humans, plus the services are consumed by the humans. So the services are not always the same that are being provided to the different customers. The services are intangible in nature. That is, they do not physically exist, and hence they do not physically exist and hence the services are intangible in nature. That is, they do not physically exist and hence they could only be felt and perceived. So in the case of this company, the transport services that they would provide, transport services that they would provide would mainly mean that they can only be felt and cannot be presented. Perishability, services cannot be stored in case if there are no consumers. Like for example, if the passengers are not available to travel, passengers are not available to travel, then this would mean that the trains would run without the seats being utilized, unlike a manufacturing company, बेकार, unlike a manufacturing company who could produce and keep the production as a backup for the future needs of the customers, right? So this is how it is gonna be. Now let's move a bit forward and building block model determinants. Can you just go through it? It has got appendix 1 also. It has got appendix 1 also. Okay, can you just go through both of these, please? Okay, what do you think should be the answer to this one, please? Yeah, what do you think should be the answer to this one, please? Okay, let's see. So it says Ghalil has 4 divisions A, B, C, and D, representing 4 different geographical areas. There is also a head office which has traditionally decided the performance measures and the annual targets. So what does Ghalil has? They've got 4 divisions representing 4 different geographical areas. There's also a head office which has traditionally decided the performance measures and the annual targets for the 4 division without any consultation with the divisional managers. The performance measure and the specific targets are the same for all 4 divisions. Okay. The performance measure and the targets are the same for all 4 divisions. The performance measures are decided by the head office. The performance measures are decided by the head office. Now, historically, Galil has only used financial measures, but the PD has decided that Fitzgerald building blocks should be used to measure and manage performance. Then it says HO has developed measures and targets for the determinants of the dimensions block, except one, except for the determinant of resource utilization in relation to how effectively Galil is using its ferries. The PD has asked you to evaluate the suitability of the potential measures of individual journey per ferry for this determinant. Has asked you to evaluate the suitability of the potential measure of individual journeys per ferry as head office has developed performance measure and targets for determinants of dimensions block except for determinant of resource utilization. In relation to how effectively Galil is using its ferries, the PD has asked you to evaluate the suitability of the potential measure of individual journeys per ferry for this determinant. Now let's just talk about it. What is the requirement of the question and what is he asking us? He's given us determinants and he's given us measure and targets. So it says customer satisfaction rating is measured by a survey emailed to every customer, 80% of above, innovation, number of new routes, improvement for services adapted, flexibility. Now, if we look at this information of the company, they own 35 ferries, 120,000 individual journeys per calendar year. So what actually happens is that these journeys can range in a duration from 25 minutes to 8 hours for the longest. Ferries operate for 365 days a year and some night journeys are undertaken. Ferries are all of a broadly similar size and are each equipped to transport up to 65 cars and 350 passengers. So each of the ferry is basically equipped to transport up to 65 cars and 350 passengers. Gully's objective is to maximize returns for the owners of the business through providing an excellent service for customers, optimizing the use of its asset and developing a learning culture throughout the company. Now, see, what happens is resource utilization. He is asking for the performance measure as he is asked for suitability of the potential measure of individual journeys per ferry. He is asking for individual journeys per ferry. What is he asking for? He is asking for individual journeys per ferry. Now, so see, the stats are as under 35 ferries, 120,000 total journeys. So what is it? Uh, this many ferries, 120,000 individual journeys. 65 cars, 350 passengers. Now just try understanding something. So if you try to do some calculation, what we can do is that we could actually say that look, you want us to comment on individual journeys per ferry as a determinant. Individual journey per ferry. The problem is that this is too simplistic and too generalized measure. The measure is too simplistic. The measure is too generalized. You know, the problem with this measure is that it is too simplistic. It is too generalized. It is too simplistic. It is too generalized. So many factors are to be considered, which is how many slots of cars were utilized, how many passenger slots were utilized. So one of the thing is that how many cars slots were utilized, how many passenger slots were utilized. This is all important, right? This is all important. This is all relevant. Now, so a better measure would be to calculate the occupancy rate, the passenger miles, which would encompass both the number of passengers and the occupancy. So this is like too general. You need to consider many factors. It just cannot be like this that you calculate the individual journey per ferry. That's nothing. That does not show how many kilometers, how many meters, everything. It is not mentioned there. So you got to ensure that all of these are incorporated. You got to see that all of these are incorporated. Without incorporation of all of this, nothing is gonna happen. Without incorporation of all of this, nothing is gonna happen. right? Okay, now last part is building block model standards. Now, can you just read through it? Okay, what's the update? Though the service which Galil offers is very similar in all four areas, the practicalities of operating a ferry service which lasts for 8 hours and are different from a service which lasts for 25 minutes, that's for sure. Manager of Division C, which has a very large proportion of its business based on long journeys, has always maintained. His performance should be judged. Okay, so each division does not own its own separate capital expenditure budget, and managers have complained that divisions have to compete. That divisions have to compete against each other for the investment budget money. Manager said that it can take a great deal of time to prepare for a bid for even a small potential investment. The chances of it being successful appears to be small. Manager of Division A to D have indicated that the route the services are saturated, and that in the words of the manager of Division A, there are more islands to sail to. Division B also has complained that our division has the oldest ferries. Her previous request to have full-time engineers assigned to her division has been refused, and she was told she would treat this request as an investment proposal to be submitted to head office. Using the three criteria for the standards block of building block model, equity, achievability, ownership, structure response, the PT has asked you to evaluate the performance measure and target selected for the determinants. Now see, what happens is that when we talk about when we talk about equity, so equity is fairness. It is different to equality. It is different to equality. Equity is fairness. It is different to equality. So it is different to equality since all the divisions have differing circumstances. Therefore, measuring the performance using the same measures and setting similar targets is not appropriate. It does not comply with the standards of equity. Similarly, achievability, the targets set should be realistic, that should be realistic and challenging. The targets which are set should be realistic and challenging. Right? Targets should be set, should be realistic and achievable. All the divisions have different circumstances, services, resources, and routes. Their targets cannot be the same. Now, the answer also has to include what? You have to compare the divisions also, like division A, like division B, like division C, like division D. You have to compare those divisions also. And lastly, the ownership. Targets, measures, all are set by the head office. They're all set by the head office. right? Targets are set by the head office. The managers do not have control over the investment decision. Money is difficult to obtain. Some divisions have old ferries. So considering all the above situations, the targets set for the measures are not complying with the standards block. The circumstances of each division to be considered and the consent of managers to be obtained to ensure that appropriate compliance of the balance scorecard takes place. All good here? Okay. So we are done with this examination paper. We are done with this examination paper, right? So that's it for today.